The reason for the fall of the shares today. Federal Reserve Chair Jerome Powell spoke and stocks fell. The now familiar pattern most recently occurred on Friday as Powell gave a speech at the Jackson Hole Economic Policy Symposium, in which he reiterated the Fed's commitment to crushing inflation. Stocks had been on something on a high in the 2 months before his speech in the hope that the Fed would soon pivot to more dovish talk. Powell and company are determined to kill inflation dead, said David Russell, Vice President of Market Intelligence at TradeStation Group. The leading equity indexes reflected investor pessimism, and all three fell sharply on Friday. As of writing, the Dow Jones Industrial Average, DJIA, fell nearly 2.3%, the S&P 500 dropped 2.7% and the Nasdaq Composite declined by nearly 3.3%. Markets had been pulling back leading up to the summit as traders wanted to hear how aggressive the Fed would be in raising rates. Today's speech, while firm in commitment, was unspecific on that front, and therefore today's decline may be short-lived. The summer rally was driven at least partly by an enthusiasm that the central bank might ease off its tightening campaign. Investors in wait and see. Market commentators explained that the 2-month rally in the S&P 500 was driven by investor hopes that peak inflation could turn the Fed away from more hawkish rate hikes. Today's decline demonstrated nervousness by itchy investors that such a pivot may not be forthcoming. But that may be an overreaction, according to Russell. There wasn't a pivot, but the Fed seems to have reached peak hawkishness, he said. Now we have to just wait and watch for prices to come down. Powell's tough talk comes as the economy, despite declining in the first 6 months of the year, remains on solid footing. It's hard to proclaim the economy is in a recession when the unemployment rate is so low and consumers are still spending. The economy will likely expand by an annual rate of 1.6% in the third quarter, according to the Atlanta Federal Reserve.